One of the keys to finding good swing trading or position trading or even intraday kind of candidate is to have a daily process flow which is well thought out, and it has only elements which are essential to do your job. So I'm looking at three kinds of candidate. One based on episodic pivot based on earnings, which is a trade which can be a longer term trade. Example of that was Facebook from 33 to around 70, which we carried. And that kind of a trade is basically a earnings news or a earnings catalyst. So there are processes which are aimed at finding that, and one of the easiest scan which I use is biggest gainers, because most of the time, like if you see W is up on earnings today, most of the time if a stock has a surprisingly good earning, that earning is announced after market close or before market close, and if it is real surprise, then you will see the stock will be up, gapping up, and you can figure out how much volume it has and what kind of catalyst it has, and based on that, if it has a big potential, if the stock is likely to make 50% 100% kind of a move, then that is the area of focus for what I would like to look at for that particular thing. Now that is before the market open, but like EP also shows up. Many EPs, like especially they are highly neglected stock which are not really followed by many people, then they also show up after the market opens. And this is a scan which I use in trade ideas, which is up 3% or more with earnings today. So this doesn't have a candidate as of now, but as soon as the market opens, you will see that candidates will show up. These are stocks which had earnings either last night or today morning. So that way you know every stock which is up on earnings at a quick glance. So this is a software which I use for finding these kind of earnings play. So that's one element of the process, which is to find episodic pivot using either the biggest gainers or up on earnings scan. Anticipation candidates are done after the market close. Like I shared last night a video which showed my anticipation candidates. So I have bullish anticipation candidate, 36 of them. Out of this, again, I would look at the market, I would look at factors like that, and only 2 or 3 are my real focus out of this. I'm not going to be focusing on every single one of them. There are 3 or 5 which are real focus areas, and that's the one which I'm looking at, and those are the one which I'll be looking at early morning, because in anticipation candidate, if you can get in as soon as it breaks out within the first 5 minutes or 6 minutes or 10 minutes, as soon as it shows some life, that's when you'll get the best results from an anticipation setup. There is no point in having an anticipation setup and waiting for it to break out and then buying on breakout. Then you might as well not have that process. You might as well buy on breakout. So that's for anticipation. Both there is a long and short anticipation scan. Basically, out of these, I'm always more focused on the higher priced, especially for shorts, and also increasingly for longs. So that's because I want to put in a lot more money into one idea. So that's as far as the anticipation is concerned. Now you can do a lot of anticipation, but there are stocks which break out based on some catalyst which is there. They are not in your anticipation list. That's a set of candidate you would still want to trade, because you don't want to restrict yourself only to an anticipation candidate. And those kind of candidates, the processes allow me to find, the remaining processes allow me to find some of these candidates. So one of the scans which is very powerful scans which I used and I shared it many times is like stock with the most upside momentum. This tends to keep going. Now this scan is basically very useful in the first 15 to 20 minutes. What happens is that stocks which hit this particular screen, like if you see yesterday stock like the one which broke down big here, like if you see Zebra was on the scan within the first 2 minutes or 3 minutes, and then the rest of the day the stock spent going down. You can see that it had a brief rally, and after that it just kept going down. Or like one of the candidate which I shared on the site, NVAX showed up in the first 1 or 2 minutes, and then like an it set up at one stage here and it made a quick move, but because of the market weakness it ended up giving up the gains. But any candidate, any stock which is going to be making a big move like EGRX or Zebra or ENV, these show up in the first 15 to 20 minutes or half an hour, and these are the one which is like, if you have to look at it this way, look, if there is a stock and which is priced at around 100 or 90, here 96, it is more likely to make multiple dollar moves, that means like in a day it is more likely to, if it is down 3 or 4% or gaps down so much, still it has a probability to go down 3, 4, $5. So those are the stocks where during intraday you can find a setup and you can look at an opportunity. And any stock which is going to make a big move down or up in the for the day is going to show up on this scan early in the morning, especially if it has a catalyst or if it is breaking out with significant power. So that's really the scan which helps you find those kind of candidate up on a big thing. Now there's a reverse of that basically, which is the bearish side of that, which like this gives you the bullish candidate, the one which is flipped, which is like stocks with most upside momentum. Flipped means like the same scan you can flip it to show you bearish thing. This tends to keep going down. So these are the stocks which you're looking at, which give you a set of candidate even if your like anticipation list doesn't show up something, or like you're a lot more candidate to work with for the day after that. The next set of a process is basically a simple scan, which is basically a dollar breakout, and I shared a video on this for those who are interested in finding opportunities in the market. Is basically a stock which is up $90 or down $90 on 100,000 volume. So this gives you stocks which are basically making a move for the day, and it is again very useful because it will show you up in the morning itself, in the first 15-10 minutes, sometimes in the first 5 minutes. If you see my posts on the site, like many times this candidate come out, the good candidate come out in the first 5 minutes itself. By 9:35 or 9:37 you know which candidate to focus on based on this particular scan. It will give you ideas, or it will give you stocks which during the intraday move, like this particular stock made an intraday move of how much, like almost like $12, or like this ENV. And if you see that during intraday, and same setup repeat, like counter trend move which failed, counter trend move which failed. So swing trade setups, similar setups show up, and because you're having a lot of these kind of breakdowns where the entire move happens, like you cannot really trade this as a swing trade after this unless it sets up because the whole move has happened in one day, or here the big part of the move, chunk of the move has happened just in one day. That's the nature of the market as of now. So you have to be basically try and capture part of the move during the day, or the entire swing trade itself happens during the day. Something like this, like is down like say around $8, and during the day if you see it sets up again like counter trend rallies fail. So that's one in terms of process. Now this will give you some sort of candidates which are higher price basically, and they may not have significant breakout like the next scan. The next scan is basically more focused on finding small caps, because small caps when they break out with force, and then they keep going up. So this is basically a kind of stock which are like making either a 4% move to the upside or to the downside, and they also have a volume surge. So their volume is higher today than volume was yesterday. Volume is about 100,000 and they have above the price of 3. Now this kind of a scan gives you candidate which are basically breaking out. So like if you see, and it can be because it doesn't have a trend filter like a stock like this, like see here also it will have a 4% breakout. See, this is a this tells you that there was a 4% breakout. So there was a 4% breakout, or the stock satisfied the condition which was the scan condition which was here. Now after that the stock went up for a couple of days, like you can see from 32 to 44. So these kind of stocks will show up in your scan, like, or like say this stock is showing up here, or like say a stock like this is showing up multiple times. It showed up here, it showed up here. Okay, so this is very good at capturing the smaller cap stocks which basically trend to move much better in terms of momentum burst. Like they keep making these kind of big moves where like in 3 or 4 days this stock was up 17 days, or if you look at a stock like this, it's in a span of few days the stock is up almost like 30% or 40% at one stage almost. If you look at the high was almost 40%. Or if you look at say something like this, say stock here 4% breakout, and like within 5 to 6 days or 10 days it was up 78%. So or here like say 3 to 5 days and it's up 11%. So that's the kind of scan. That scan is useful to find those kind of candidate. Obviously you have to be always cognizant of the market and take trades based on that and vary your risk based on that as of now, because the market is showing some weakness based on our um, breadth model. You have to be cautious. Doesn't mean that you don't take a long trade, but you have to be take a smaller size trade. So these processes together run during the day, and as a result of that, you'll find some candidate which are long term in nature, which is like basically one which you can hold for a longer term kind of a thing. Then you have anticipation candidate, which basically allows you to enter with a lower risk because your stop will be very close because you're watching this candidate and you already done your homework and you want to enter, and that's more suitable for some of the working people. Whilst some of these things are more for active traders, like something like this, I don't think a working person, unless he's working where he has no other work, can do this. Or dollar breakout can be used both ways. It can be used for intraday moves, and also at the end of the day, if you go through the dollar breakout, you can find one or two candidates which are basically good candidate for a swing trade also. Like say if you look at say something like Valero. Now Valero here also had a 4% breakout also, but like if it didn't, like here it didn't had a 4% breakout, it was up only 3.37, but it was still a valid swing trade. So those you can find using the processes. Together these processes run concurrently, and then they find candidate. Now one of the things is that once you have processes in place, then over a period of time you get more experience with those processes, you are more focused on those particular processes. And I'm not saying that everyone should follow the same process, but the key point is to have a process and then day in and day out stick with your process. If your process is well thought out, then you should not be looking at others. You don't need to find candidate from others, because if the scan what they are trying to do are right, the logic which you are using or the market condition or the market anomaly which you are trying to exploit, or the basic nature of the market move which you are trying to exploit, if it exists in the market, then your scan will find that. And if your scan finds it, then you can use that to find your own trades. And once you have this, there is another part of trading which is basically how to enter, how much to risk, and how much when to get out. Some of the things, like if you're doing this short term kind of a thing using trade ideas or dollar breakout, you have to be very quick. Sometimes the entire move happens in a blink of an eye, like 3 or 5 minutes and 8 minutes. You can end up making $2, $3, and on a lot of size of 1,000 shares, that can be a lot of money in just a blink of eye. So these require different set of skills or processes that you have to think through. Like you can't be really waiting and calculating how much I'm going to risk. You have to have a fixed position sizing for this kind of trade, and you have to be very quick in terms of getting in. You don't wait for a confirmation. You have to be very quick in terms of deciding how much to profit on. Like say if you look at something like Valero, you look at this is going to make multiple dollars move or $1 or $2 move. As against that, if you look at an NVAX, it is not likely to make a multiple dollar move. A move of 50 cents is good enough in this stock after it breaks out, or $1 is good enough. Or like if you look at say something like yesterday's Zebra, look at this stock is capable of making multiple dollars move, 4, 5, 6, $7 move, because it's high priced. A 10% move in this particular, it did went down 23%, but it was the gap itself was like I think around. That gap itself was around 12%. Okay, so that's half of the move actually happened in the gap, but still a 10% move down will be like a $5 or $10, and that's how okay, look what target to set. Now this kind of process orientation requires you to think through and eliminate processes and only focus on particular processes. This is a process which runs during the day, or at least till around afternoon, and after that there are next set of processes which are used to find candidate for next day or to look at other things. But these are the core areas of my focus in the first at least 1 or 2 hours, from where you will get, like if you are going to find an EP, you're going to find it early in the morning. If you're going to find an anticipation candidate which is going to break out, it tends to happen in the first few minutes or in the first 15-20 minutes. Similarly, all these trades which you're looking at, they will show up early in the morning most of the time. Most of the good breakouts will show up by before 10:30 or 11 o'clock. So that's really the process orientation. And no matter which setup you want to trade, or no matter what you want to do, unless you have a set process, you will find that you will not be making much progress, because unless you have set process, you're just doing different things different day. And because you're doing different thing different day, or following different methods different day, or like following someone on Twitter or some other media, you're not really getting anywhere. So you need to think through your process, think through what are the basic tendencies of the market. Like the basic tendencies of the market which I'm trying to exploit is momentum. The basic tendencies of the market which I'm trying to exploit is earnings. Market reacts to earnings. Surprising earning leads to big moves. That's a market tendency, and it hasn't changed in 100 years. So momentum exists in the market, and it hasn't changed in 100 years. Or momentum burst, which is a very, very well documented phenomena in the market for hundreds of years, which is like stocks tend to move in the direction of range expansion. So when there is a range expansion, it is likely to be followed by multiple days, or at least 3 to 5 days, move in the direction of a range expansion. This is a range expansion. If you see the moves, this day is larger than the couple of days, and then the stock goes up for 3 to 5 days. And this is a swing phenomena. This kind of moves tends to be 8 to 20%. You can't be like looking at them as a long-term moves. Like here, there's a range expansion series of positive days, a larger down move, and then like you get a 4% down. Or here, this is a range expansion to the downside, and stocks makes a 14% move. Or here is a range expansion in the context of where the stock is, and it goes down. You can look at any stock, and you can look at it moves in the momentum burst. You'll see that like a series of narrow range day, there is a momentum burst here, or range expansion, and stock made a 6% move. So that's really what the phenomena one is trying to exploit in these methods, which tend to happen on all time frame. It will happen on a 5-minute time frame, it will happen on a 1 hourly time frame, it will happen on a 1 day or 5-day time frame. But these are all short term. Like the holding period in this can be few minutes to few days, while this can be longer term, and this are again really 3 to 5 days kind of a trade. So this is a brief overview of the process. One of the ways to do it, not the only way to do it, but this can give you some ideas as to how you can set up your own process flow and stick to processes. Even though there are 5 processes which are running, they are like concurrent in the sense, look, and it's not really a lot of them are common, like episodic pivot candidate will also show up in dollar record, it will also show up in 4% record, it will also show in trade idea, and some of the EPs are basically common candidate in all the things, or anticipation candidate. If it breaks out with force, it will also show up in all these scans. So this is a simplified version of process which I use. And if you have any question, you can always ask. There is no charge for questions, asking questions. Hope this kind of video helps you in understanding process flow and becoming more process oriented, because process orientation is the key to making money in the long term in the stock market. Once you get your processes right, you'll find that things begin to happen.